President Donald Trump's recent tariffs, including a 10% baseline tariff that took effect on April 5, 2025, have sent shockwaves through global markets, prompting legal challenges, international backlash, and significant volatility in the financial markets. The administration's decision to impose these tariffs has led to widespread uncertainty, not only affecting U.S. businesses but also disrupting trade relationships with key partners around the world. The 10% tariff on a broad range of goods imported from foreign countries, particularly China, has been a cornerstone of Trump's trade policy since taking office. Initially, the tariffs were framed as a necessary move to protect American industries from unfair trade practices and to reduce the trade deficit with China. However, the recent implementation of these tariffs has led to increased tensions on the global stage, particularly as U.S. companies begin to feel the impact of rising import costs, supply chain disruptions, and retaliatory measures from affected countries. One of the most significant consequences of the new tariffs has been the surge in legal challenges from businesses and industry groups. The Liberty Justice Center, a conservative legal nonprofit, filed a lawsuit on behalf of 5 small U.S. businesses, arguing that the president's unilateral decision to impose tariffs violates the Constitution. Specifically, they claim that the use of the International Emergency Economic Powers Act (IEEPA) to enforce these tariffs bypasses Congress, undermining the legislative branch's authority over trade policy. This lawsuit has set the stage for a potential legal showdown, with businesses across the nation closely monitoring how the courts will respond to this assertion of executive power. In addition to the legal challenges, the tariffs have sparked heated international reactions, particularly from China, the U.S.'s largest trading partner. Following the announcement of the 10% tariff, China retaliated by imposing its own set of tariffs on U.S. products, raising some to as high as 125%. This retaliation escalated the trade dispute between the two nations, creating a vicious cycle of tariff increases that have harmed businesses on both sides. The initial hope that the two countries might reach a trade agreement to ease tensions was dashed as the baseline 10% tariff remained in effect, signaling that the trade war is far from over, despite occasional signs of de-escalation, such as a temporary 90-day pause on some tariffs as part of ongoing negotiations. The underlying tensions persist. For example, while China agreed to ease certain tariffs on U.S. goods as part of these talks, the 10% baseline tariff on imports from China remains intact, continuing to affect industries that rely on Chinese manufacturing and raw materials. The global economy, already facing challenges such as the aftermath of the COVID-19 pandemic, is now grappling with the ripple effects of these prolonged trade disputes, which have disrupted established supply chains and increased costs for manufacturers. Worldwide, the impact of the tariffs has also been felt strongly in global financial markets. The stock market, which has been highly sensitive to news related to trade and tariffs, has seen significant fluctuations in response to each new announcement regarding the trade war. Major indices such as the S&P 500 and Nasdaq have experienced dramatic swings as investors react to the uncertainty surrounding the tariffs. Companies that depend heavily on international trade or import raw materials from overseas have seen their stock prices dip, while others, particularly those in industries like agriculture and technology, have faced rising costs and declining profit margins.